Hello, everyone. So many consultants mistake cash and profit to mean the same thing. Have you ever done this? Well, I am here to tell you that they are actually not the same. Here's the thing. Mistaking cash for profit and vice versa can lead your consulting company into financial trouble. And who wants that? Well, today I will explain the difference between the two, and I'm going to help you determine which one is actually king. Stay tuned. Welcome to Say Yes to Profits. Here at Say Yes to Profits, we help consultants build $1,000,000 firms while tripling their cash flow and profits without stress, struggle, or burnout. Now, our goal is to make you smile when you log into your bank account because you have more money, more profits, and you're paying less taxes. So subscribe, follow, and listen up. And as a result, we will make it rain money in your business. Now join me on the path to say yes to profits. Welcome everyone to Say Yes to Profits TV. I am Octavia, CEO of Say Yes to Profits. We're streaming live right now on multiple platforms, but no matter where you're joining us from, go ahead and hit the like, subscribe, and share this video on your platforms as well. Also, answer any questions or comments as you're watching, and I will answer them at the end. Say Yes to Profits is a virtual CFO firm that helps six-figure consultants and service-based entrepreneurs say yes to profitable $1,000,000 businesses while paying the smallest legal amount possible in taxes with our signature profitable $1,000,000 roadmap virtual CFO services. For more information, of course, visit sayyesToProfits.com. So what I want to start with today's live is shocking statistics regarding cash and profit. So here's the thing. 80% of businesses fail because they simply run out of cash. And only 40% of businesses are profitable. In addition to that, cash flow and a lack of financial management is listed as one of the top 5 reasons consultants go out of business. Oh, wow, right? OMG. Now, let's deep dive into this just a little bit more. Did you know that you can be profitable on paper but have no money in the bank? Yes. So let me paint this picture for you. Let's say you are reviewing your income statement, which is also known as your profit and loss statement for the month of May, right? May is my birthday. And at the very bottom, you actually generated a net profit. Woo, right? This is something to celebrate. You are absolutely happy. Okay, stay with me now. So the next thing you do is log into your bank account because you're expecting to see the amount at the bottom of your profit and loss statement also as your bank balance. But lo and behold, you log into your bank account and it's not there. As a matter of fact, your bank balance is much lower than your net income on your profit and loss statement. Now, at this time, you're thinking, what is going on? OMG, why are these numbers different? Have you ever had that go on in your business? Have you ever had that type of experience? Well, let me enlighten you on the difference between cash and profit. And we're going to start with cash. So what is cash? Well, cash flow is the flow of money in and out of your business. Cash can flow in and out of your business in several different ways. For example, cash can flow in void revenue, loans, grants, owner's contributions, and more. On the opposite of that, cash can flow out void credit card payments, loan payments, owner's distributions, and expenses. Now, you can have a positive or negative cash flow. And in just a second, I'm actually going to show you how. But for now, a positive cash flow means that your company consistently has more cash entering than the cash that is going out of your business. And on the flip side of that, a negative cash flow means that more money is leaving your business than entering your business. And of course, you don't want that. Now, as a consulting firm owner, you want to make sure that you have a positive cash flow at all times. Now that we've covered cash, let's deep dive into profits. So, what is profit? Profit is the financial gain or loss between the amount of revenue earned and the expenses incurred during a period of time. If you earn more money than you spend, this will result in a net income or net profit, right? They mean the same thing. If you spend more money than you earn, this will result in a net loss, which of course you don't want. So now, what is the difference between cash versus profit? Well, first, you can earn money for completing a consulting project, for example. But if your client never pays the invoice, right, that means no cash actually entered your bank balance or your business. Therefore, you earned the revenue, in which on your profit and loss statement, you may show a net income, but your cash flow or your cash balance actually never changed in this example because your customer or your client never paid the invoice. Likewise, for expenses, you can owe for expenses but never pay them. Therefore, even though you owe the money never left your bank account, right? Here's the thing, the biggest mistake that entrepreneur consultants and small business owners make is laser focusing on their income statement, but hardly ever focusing on their cash position or their cash flow statement. And unfortunately, the income statement only identifies your revenue and expenses. It does not provide you with insight into your company's superpower, which is your cash flow. You see, a company can have a profitable business or be profitable on paper, but have little to no money in the bank account. Now, I call this paper profit. So here's what you want to do. Instead of just reviewing your profit and loss statement, you also want to consistently review your cash flow statement or your cash position. And let me break that down for you. Your cash flow is your beginning cash balance plus cash in minus cash out, and that will give you an ending cash balance. All right, let's look at something else. Let's say that this is your beginning cash balance, right? You have $60,000 when you first started. You earned $50,000 in revenue and your expenses were actually $40,000. That means your net profit or your net income was $10,000. But remember, your cash balance is the beginning cash balance plus what came in and what went out, and it's going to give you an ending cash balance. So going back to our example, you're going to have to take your beginning cash balance of $60,000 plus your net profit of $10,000, and that's going to give you an ending cash balance of $70,000. You with me so far? But let's flip this. Let's say this is the example, right? And you earn $50,000 as you see here, but you only received $30,000, right? You didn't receive the $50,000, but your expenses were actually $40,000, right? That means you actually had a net loss. Okay, because of what was received. We're only thinking about this from a cash perspective, right? So then you would have to take your 60,000 minus what you lost of 10,000, and that means your ending cash balance in this example will actually be $50,000. Do you see the difference between the two? In this example, you earned 50,000, right? So you truly have a net profit on your P&L, but you only received $30,000. That's why your cash flow is so important. All right? So let me sum this up for you and let me make it perfectly clear of the difference between cash versus profit. All right. Profit is how you keep score in business. Cash is your business's superpower. Without enough cash, your business cannot continue to operate. The significant difference between the two is timing in which the money actually received into your business and timing in which the money actually left your company. Okay, so today I provided you with the difference between cash versus profit. If you have any questions or comments, definitely leave those below. Also, be sure to join me for Say Yes to Profits Financial Fridays every Friday at 11 a.m. Eastern Standard Time. And don't forget to subscribe right now, like, and share this video on your social media outlets. This is Octavia Conner, the consultant's virtual CFO. Until next time, say yes to profits, everyone. Toodles.